Well, it looks like a lot of us real estate investment trust or REIT investors were right all along thinking that real estate investment trusts across the board were going to recover significantly, and that was if and when Jerome Powell and the Federal Reserve starts to cut interest rates or even says there's a big potential for future cuts coming soon. Now, as you can see right here, VNQ, for example, the Vanguard Real Estate Index Fund ETF, which was beat up like crazy back in October of 2023, it bottomed out around $70 per share. Now it is recently trading above $90 per share, which is a massive recovery, offering this ETF a one-year high at that. Now in this video, we're going to talk about my number one favorite real estate investment trust, Realty Income, a stock that I currently own nearly 3,000 shares of and have been buying shares of for around 6 or 7 years. I want to go over why I think Realty Income has the potential to rally extremely hard from here, even off of the most recent recovery that Realty Income stock has seen. So trust me, if you own Realty Income or ever plan on it, you're going to want to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the main reason I think Realty Income, along with all other real estate investment trusts, are going to continue to rally like crazy, and this is in the up and coming weeks, the Federal Reserve's next decision, the next meeting is going to be 6 weeks and 4 days away, or September 18th to be exact. Now, as you can see right now, and this could of course change, it's being priced in that there is going to be an interest rate cut, but not even just that meeting. In December, there's a high probability being priced in that we are going to see a significant lower interest rate from where we are currently, which again is all speculation, but that's what's being priced in as of right now. Now, I don't think it's necessarily rocket science or any sort of magical surprise that interest rates being lower either now or in the future are going to cause real estate investment trusts to rally, which is exactly what I've been saying for a long time and exactly what has happened so far. So much to the point where Realty Income stock, as of the filming of this video, is up 13% as far as price return goes on the 1 month and is officially in the green year to date, which is outstanding, was trading at $50 per share just a few months back. Now, I personally think that some of the highest quality REITs across the market, not every single REIT is of course created equal, but I'm talking about quality here. Some of the real estate investment trusts that have some of the top tenants, even though Realty Income does have a few tenants that are questionable, we're going to go over that in a second here, but because Realty Income stock does have a high credit rating, and because Realty Income is fundamentally very strong as of right now, I think there's a high potential that we are going to see an up and coming high of at least $69 per share. Now, even though that's $10 off of where Realty Income is trading right now, and I wish I could even offer you a potential higher forecast for a price target, I think going off of where Realty Income was trading not that long ago, back in 2023, Realty Income was trading around $47. So going from the most recent lows to the $69 high, that's a massive increase as far as price return goes, not to mention that 5 or 6% dividend that's paid every single year to investors on top of that. Now, this right here says stock price forecast. The 14 analysts with 12-month price forecasts for Realty Income stock have an average target of $60.89. So basically more or less where it's trading as of currently, with a low estimate of 48 and a high of 69. The average target predicts that there could be an increase of around 2.65% from the current price, or more or less the average thinks Realty Income is going to trade more or less sideways. But I do have a feeling that if and when interest rates are cut, I'm suspecting that they're going to get cut even faster than a lot of people think. And I think real estate investment trust REITs that have been sort of bogged down by the higher than normal interest rates over the last few years, I think they are going to have a new life form, and I think we're going to see the high quality ones skyrocket. Now, to go over some of Realty Income's fundamentals, this REIT once again is what I would consider super high quality. And this is because the management, but also not just that, the fact that Realty Income buys the sort of real estate that they do, and on top of that, the top tenants. Now, Realty Income has around 15,500 commercial properties at least to 1,500 different clients across 89 different industries throughout 50 states, all of them, and the UK, and 6 other countries in Europe. Now, with a possible recession looming, yes, there is a possibility that we are going to see a recession towards the end of this year, and if not, towards the beginning of next year and beyond. I think it's, for one, a really good time to go through all of our stock portfolios and see what we're actually holding and ask yourself, is this stock, is this ETF going to prepare good, bad, or maybe sideways during a potential recession? Now, for Realty Income, for example, the largest portion of their entire portfolio are things like grocery stores, then convenience stores, then dollar stores. Those 3 alone make up nearly 30% of the entire portfolio. Now, grocery stores, convenience stores, and dollar stores are probably going to do very good if, of course, we see ourselves in a recession. Now, things like restaurants and casual dining, or even general merchandise towards the bottom of the portfolio, I personally think that these things might not do as well. Even things like health and fitness, those things might take a little bit of a hit when people have less money, when people are working less, when things get bad. But to get into some of the negative, we have to talk about it. I've talked about this before, and I'm completely transparent about this. I do think there's some clients in Realty Income's top 20 clients that are not ideal. Certain names in here that if I could snap my fingers and remove them and replace them with something better, I definitely would do so. But overall, even the names on this list that I personally do not like, and I think we can all agree there's a few on this list at least, they're relatively small portions of the overall portfolio. Although Walgreens, for example, is 3.4%, and Walgreens is definitely going through some trouble. But for the most part, at least, the portfolio is pretty safe and sound if you ask me, with a few top clients that'll probably churn in the next, say, 5 or 10 years, which I think Realty Income is totally capable of figuring that out. Now, also just thinking worst case scenario, if of course there is an up and coming recession, I personally would want to have exposure to retail real estate, especially long-term triple net lease, high quality retail real estate. I personally do not really want any exposure into gaming or into casinos or things like that, because I do not think those are going to do that well if of course we see a sustained recession. Now, for that reason, I recently sold half of my position of Vici, just because I'm much more bullish on retail real estate. As a very conservative, sort of scaredy cat investor, I don't really want to have too much exposure into areas I'm not too sure about, and that's why with Realty Income having almost 80% retail exposure, that at least for me helps me sleep very well at night. Now, looking back in time at Realty Income's occupancy, even during 2007, 2008, you can see the occupancy did dip a little bit. They did fall into a little bit of trouble, but still shortly after they recovered, and for the most part ever since then, Realty Income has had around a 98 to 99% occupancy rate, which honestly, what more could you really ask for? So even though it's the same story, I think there are some top clients that Realty Income is going to have to sort out, and I'm 100% certain they're not blind, they're sorting this out as we speak, I'm sure. I still think that Realty Income, if and when we see interest rates cut, and this is especially if we happen to see extensive interest rate cuts, I think we are going to see Realty Income skyrocket, and I think we are going to miss out on maybe one of the last opportunities to buy Realty Income and lock in a nice juicy starting yield. Now, it's almost a disservice to talk about Realty Income for so long, but not remind everyone that's watching that Realty Income has not only been paying dividends for years and years and years, but also month after month for the most part, Realty Income's been raising their dividends significantly. Back in the day when I first started buying Realty Income, probably in around 2019, 2018, Realty Income was paying just over 20 cents per share per month. Now, as of recently, north of 26 cents per share per month, which definitely adds up, especially as you buy more and more shares over time. So even if Realty Income trades sideways for the next year or two and then moves up from there, even if Realty Income trades a little bit down, much less if Realty Income starts to move up from here, Realty Income is going to continue to grow, pay their shareholders dividends, and to pay them more and more cash flow over time. But now lastly, most importantly, when it comes to Realty Income, ticker symbol below, my favorite REIT across the market, do you agree or disagree that Realty Income has the potential to move up significantly in price from here? Or do you think Realty Income has hit a new high and is going to go down? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.